Hello, I'm Dr. Cheryl Dunn, and I'm here to demonstrate an introductory financial accounting problem in which we are calculating the interest revenue on a note receivable. The company is called FashionBackpacks, Inc., so take a look at the problem. So as you see, we are asked to calculate the amount of interest that the company should record during the current year. It's a calendar year company, meaning they make their financial statements for the period of January 1st through December 31st of each year. The note was taken out on May 1st. And so from May 1st to December 31st is 8 months. So we're recording 8 months worth of interest for the current year for this company. And the note amount was $30,000. We're going to multiply that $30,000 times the annual interest rate, which is given to us as 6%. And that means if we held the note for the entire year, we would earn 6% interest on that, which would be $1,800. But we didn't hold the note for the entire year that we're accounting for. And therefore, we need to multiply this by 8/12 to indicate that we're only holding it for 8 months out of 12. So we're basically converting this annual interest rate into an 8-month interest rate. So when we multiply the $1,800 by 8/12, that gives us $1,200 as the interest that this company earned from May 1st through December 31st of this year. The adjusting entry we would make to record that interest then would be a debit to interest receivable, because they wouldn't be getting the cash yet. They're not going to get the cash until the note ends, which is going to happen in another month. And so we would debit interest receivable for $1,200, and we would credit interest revenue for $1,200. Now, just as a note, some of you might be wondering, why did we not take this as 8/9? Because it's a 9-month note, and we're accounting for 8 months out of the 9-month note. The denominator of what we're using here doesn't have anything to do with the length of the note. The only thing we have to worry about with the length of the note is, did it pass the year end that we're accounting for? In this case, it was a 9-month note, but we got to December 31st. There's still another month before we're going to collect this note, but we have to make our financial statements at the end of December. And so that's where the 8 comes in. But the 12 is to adjust the interest rate, which is always given as an annual interest rate. So this will always be a 12 on the bottom here, not the length of the note. Whether this was a 9-month note or an 18-month note, our calculation would have been the same. Thank you for viewing this demonstration, and I hope you found it helpful.